My name is Andrew Davis and I'm the ambassador of Stone & Chalk, and I'd like to welcome you to this event tonight on the future of financial services. Let me begin by saying that Stone & Chalk acknowledges the Gadigal and Bidjigal people of the Eora Nation, who are the traditional custodians of this land which we gather. We pay our respects to elders past, present and emerging, and we extend the respect to all Aboriginal and Torres Strait Islander peoples with whom we work and with whom we share stories. So for those that are new to this space, Stone & Chalk was founded in Fintech in 2015. We're a not-for-profit organisation with a proven track record in developing successful growth and support frameworks for founders in the emerging tech sectors. And this now includes exciting new opportunities such as space tech, prop tech, med tech and ag tech. Our collaborative workspaces in Sydney, Melbourne and Adelaide support over 580 resident entrepreneurs. Stone & Chalk Event Lab is a centre for thought leadership events and advocacy for these emerging sectors. And we've hosted over 500 events in the last year alone. But something special tonight, and I guess it's an add-on now to all of our key events, is that we're actually offering a children's creche right here on the floor. And that's so that we can ensure that as many people have access to come and join and participate in the event. So I'd like now to introduce our MC, Mark Pesce. So Mark is a leading futurist, author, entrepreneur and innovator. He's been at the forefront of the digital evolution for 35 years, before digital, I guess, became a word.
Or digital was the new black, yeah.
Yes. And he's a much sought after keynote speaker for major conferences and leadership gatherings. Mark has also been mentoring startups here at Stone & Chalk since the very beginning. He's a good friend of mine and he's an avid podcaster, and it's actually, I guess, that he does which sparked a series of events that has led us all to being here tonight, and you'll hear more about that shortly. So welcome, Mark.
Thank you, Andrew. So 2 days after Christmas, I was wandering around Chippendale looking for an open cafe, because as you know, Sydney, everything closes. And I find a local cafe that is open. I go up to the barista, oh my God, make me a soy flat white. He's like, here it is. I hand him a crisp new $50 banknote. He's like, sir, we cannot take your money. I'm like, what? He's like, no one else is paying with cash. I don't have enough money in the till to change that $50 bill. And this is the first time that actual banknote in my hand had been turned away at the till by an establishment that still took banknotes. And it told me that Australia had made this very interesting 0-to-1 transition into digital payments. And that has had a side effect that none of us really thought about, which is that when you change the nature of money, you change every institution that is touched by money. And the first row of those institutions are the institutions that help us save and manage and invest our money. That is the banks. And so the fact that we are in this transition into digital payments, and the fact that we now have this rise in neobanking and that they're happening at exactly the same moment is probably not a coincidence. Because what's happening now is we're changing the way we're thinking about money, we're working with money, we're dealing with money, and all of the institutions will now have this incredible opportunity to take advantage of that moment. And that's the opportunity for a new generation of bankers, the neobankers. I want you to note very carefully, the only two people on this panel who are in suits are the ones who are not neobankers. We are lucky to have 4 of these neobankers with us tonight. 3 of them have already appeared on episodes of BETABANK. That was the podcast that was inspired by what Andrew and I saw happening across Australia last year as all of these brand new banks, these neobanks, were getting started. So let me introduce our incredible panel. Dominic Pym, co-founder of Up Banking. Rob Bell, CEO of 86400. Simon Costello, CEO of Frankie Financial, and Alex Twigg, co-founder of Judo Bank. There we are. Amazing. Now, we've got about a half an hour of questions that Alex and I have prepared. They're all designed around the framework of thinking about this because this is a startup hub and a startup fintech space. We're going to ask the questions that startup founders would be asking, and then we will be turning it over to you. You can ask any questions that you like. So, first question from me to you, Rob. How do you start a bank? What is that process there? What does it mean? And didn't you have to raise an extremely large amount of money to do this?
It does take quite a bit of money to start a bank, and I can't actually take credit for starting 86400. The initial work was done by our CIO, Brian Parker. So it was our technologist, our lead technologist, who actually did the original business case and the original work. And what he was doing was looking at what was happening overseas, and we looked at actually bringing a couple of different banking models to Australia because we saw nothing happening in Australia that was using the latest technology. But when we did our deep due diligence, we came to the conclusion that neither of these banks we looked at actually had the technology stack set up the way we would want to use it efficiently in Australia. It was always an afterthought. So that's where the idea came from. We were very fortunate that we were funded 100% by Costello, which is a leading payments company in Australia. It is basically the #1 payments company outside of the big four banks. So we had 100% funding from them on day one, which enabled us to entirely focus on building a bank. We built our technology first. We actually had the bank operating 100%. And the last thing we did was got our license, which is why we were able to launch basically one day after getting our license. So we actually built a bank in practice, and then we had to convince the regulator that we'd built one in theory.
And so what about Alex from a Judo bank perspective? Probably out of the panel, Judo's been in the market the longest, and perhaps more fairly, we should call you a challenger bank. But do you want to talk a little bit about, how did Judo bank come to market and the journey and the demand on capital?
Yeah, of course. Starting a bank basically involves a lot of beer and a lot of pizza, and a lot of crazy people. But from a capital perspective, we went out and originally we wanted to do this properly. So we didn't want to go out and start something small. We wanted to actually have set some really big goals for ourselves and go hard. And banking is a massively capital-intensive business. Not just the amount of money you need to build the tech or employ the people, but the amount of money that you need to lend on the balance sheet is enormous. So we, like everybody else in fintech and startup land, thought, $20 million, that'll do. And we sort of took the kitty and we shaked it about a bit, and we sort of came up with $1 million. And then we decided, bugger, that's not enough. And the capital raising process is probably the hardest part of the process for us. Actually building the bank, creating the technology that sits underneath it, that's difficult. But going through the process of raising enough money to launch a really substantial and sizable bank is very hard. We've currently raised somewhere in the region of $540 million.
Let me just choke on that for a minute, because I think probably Canva's last round was what, 300 million? And they're worth $4 or $5 billion now, right? So you've had to raise more than the hottest startup in this country to basically get your bank up and going.
Yeah.
And okay. Are you at the end of that raising journey now?
No, we're right in the middle of another one. So we are about to, we're in our round 3, as we call it, to raise another 400 million. And the effort involved in that is enormous. Just going around, Joseph and David, who basically ran most of the capital raising process, we didn't see them for 2 years pretty much. They were off around the world talking to VCs. We basically got a phone call every now and again that says, Alex, need you in Hong Kong tomorrow at 2:30. And that was pretty much it. And we jumped on planes, went and did demos and stuff, and away you went. But, and like every other startup, we've been through our near-death experiences twice, and it's just a hard process.
All right. Now, Dom, you had a different path to market because Up has a different relationship because it's, and maybe explain this, the relationship between Bendigo and Adelaide Bank and Up and how that sort of brought you to market, because that's another path, right?
Yeah, sure. I was going to answer the first question that you asked as well, which was, I guess, almost how did you start it? Well, the motivation to start it. So I'll just start there, and then I'll talk about how we did it. But the motivation for us was twofold. One was born out of frustration. So we've been working in the banking space, building technology. So I have a company called Ferocia, and Ferocia built technology for Bendigo and Adelaide Bank, for the largest credit union in Australia, under NDA, I can't say their name, but you know who they are, for one of the really successful mid-tier banks up here in Sydney, and then 2 of the major banks. And we built technology in Asia. Across 10 countries was the idea to build a digital bank, and then it was to build a digital bank here in Australia with one of the majors. We did that for 4.5 years and never released any software to customers. So that was a complete waste of time, but it was a good learning experience, and that created the frustrations. That was the first seed. The second seed for us was helping people, because we felt like there was a revolution happening around the world, and in Australia everybody was sort of stuck doing what we're doing, and it was a little bit insular from the rest of the world. We have really great banks and really, that weather the financial crisis, and really great digital platforms here in Australia, internet banking, mobile banking, but something magical was happening overseas, and so we wanted to help people. So helping people and being frustrated equals a bank, right? Now how it's set up is that, and we're a little bit different than others, we got to market first in the sort of retail neobank space, and the way we're able to do that is that my company Ferocia partnered with Bendigo and Adelaide Bank. So we built their mobile, tablet and internet banking systems for 5 years, and then we told them we had this crazy idea to build a bank, and to build a bank you need $100 million to like open the door, to get started at least, another $100 million for lending or whatever. So we're like, we need at least $100 million, we need a core banking system, and we need a banking license, and you couldn't get a banking license in Australia at the time. You could, but you get a traditional banking license. We didn't have the restricted banking license, the sort of easier on-ramp. And so we were telling this story to Mike Hurst and Marnie Baker, who was the ex-MD and the current MD at Bendigo Bank. And they said, you know what, we have $100 million, we have a banking license, we have a core banking system, we've been working together for 5 years, maybe there's something we could do here. So we created Up, and Up is a collaboration between my company Ferocia and Bendigo and Adelaide Bank. And the easiest way to think about it, because it's complicated for the regulators and for all the legals and everything, but the easiest way to think about it is that we're a technology company, Bendigo's a bank, they provide the licensed financial product, and we do everything else.
Yeah, but you just invented a new business model there. I just want to point that out, right? I mean, that's not something that you think of. It's like, oh yeah, there's this bank that partners with a technology company, and bam, there's a new bank.
Yeah, a lot of people don't understand or are a little bit confused or anything, and there was nothing like it in Australia at the time when we did it, and we looked around the world and we found one company was kind of similar in the UK, but it's a unique way of doing it, and what it means now is that we've seen a whole bunch of other fintechs partnering with major banks and creating these new businesses, and there's one that Macquarie recently announced, and there's been a couple with some of the other banks as well. So we actually pioneered that sort of business model rather than sort of starting a bank. But for us, it was, you've heard 3 different ways to start a bank. Like, it's not easy, but it's also not impossible.
So Simon, what about Frankie Financial? I guess from a public profile perspective, most people wouldn't have heard who you are. You're not offering services to consumers into the market, but clearly you've found a great niche in the context of neobanking. Do you want to talk a little bit about how that came about?
Yeah, sure. So Frankie, or Frankie Financial is our name. It doesn't sound very much like an enterprise sales company. And that's because we were not intending to be an enterprise sales company. Frankie, we were intending to be a neobank like these guys. That was the grand plan. And then unfortunately, reality hit, because it is really tough to build a bank. Now, we've spoken a little bit about capital raising, what needs to be required. There's a lot about regulation, and then you actually build a great bank that people need to switch. And so where we got to is we started building the bank. We got the team together, we raised the money, we started building the bank, and we actually started at the very, very, very beginning. And that was, how do you onboard the customer seamlessly? That's what's called KYC, or in Australia, the 100-point check. And what maybe a lot of people aren't aware is that when you pass on your details, there is a number of different things that start happening in the back end, and you're connecting to a number of different service providers. And so what you need to do is you need to connect all these different providers, all these back end vendors together. And just because you don't build a bank every day, there's just actually no service layer. There actually isn't someone that actually helps you to do this. And so we found it super tough, and we started building this straight away, and this is about a couple of years ago. And we started building this, and then we knew a number of other neos at the same time. And they're saying, hey, if you're going to build that bit, maybe we could leverage off your technology and you could help us. And then we thought, wow, maybe this is a business. And so ultimately where we end up getting to is a lot of our customers are actually the neobanks. And actually I now have a couple of the big 4 customers as our customers as well. So in short, what do? We're an aggregator for the compliance and fraud piece of banks and other financial institutions. We've connected to over 100 different vendors and data sources. We bring that together into a single layer or platform, and then you walk into a bank and say, here's a single unified API, and you can select which vendor you'd like to use.
So you're a fintech startup actually based in Stone and Chalk, Melbourne. We have other fintechs in the room. And I guess one thing we often hear is about fintechs struggle to engage with banks. And, you've said actually you're working with not just neobanks, but Big Four as well. So do you have a view in terms of, who's easier to work with? Because neobanks are new, is they've got a fresh sheet of paper, is that a faster, better journey to take? Or how do you compare the two sectors?
As I said, we sort of fell into this, so it wasn't necessarily sort of strategic, and sometimes you can re-engineer the story, and this is always the plan, and this is where we're going to go to, etc. So we started solving a problem that we think was really tough, and we experienced that ourselves, remember. So when I'm speaking to a customer, which ended up being another neobank, I could speak very eloquently, this is the problem that we're solving, and this is how we can help.
Yes.
We can reduce costs, we can save time, and then they could really understand that. So working with the neos initially at the start was really quite straightforward. We managed to get a little bit of PR, which then actually ended up being an inbound request from the Big Four. Now, obviously, they're our clients now, so I need to be a little bit careful and what I'm saying, but obviously, as you can appreciate, when you deal with a larger company, you're definitely going to have more bureaucracy. It's going to take a huge amount of time. None of this will be a surprise to anyone, I'm sure. There's pros and cons, obviously, with some of these bigger players and those volumes, etc. But yeah, a neo should and will always move faster, just because of less bureaucracy.
And what about others on the panel in as far as, well, because you're a neobank, to what degree are you able to or proactively trying to collaborate with other startups? Because, again, I guess the feedback is incumbents, either don't have an interest, or if they do, they can't actually translate that into commercial outcomes. Is this something you're kind of proactively trying to embrace to partner with other organisations, not necessarily just the big end of town from a tech perspective?
Yeah, we work with, I think, with over 40 different partnerships that we have in place to provide different services. The reality is that we move at an extremely fast pace, and we're very, very clear about what we want. And so we have just naturally partnered with smaller, earlier stage companies. There's really not a number one vendor that we work with because they're too slow, they're too expensive. So yeah, we naturally just gravitate towards them, and absolutely we're happy to work with people. And we've got some good examples of that already. Our energy switch product, which is just about to launch, which helps people save up to $400 a year on their energy bill. No commissions. It's a service that a bank has never offered before. Our partner with that is a startup as well. They're the data source. We provide the smarts in our app. It's just an example of where we absolutely can work with smaller companies, and to do that with a big company would have taken years instead of months.
Interesting.
It's also the definition of startup, right?
Yes.
So Ferocia, some people call Ferocia a startup, but we're 53 people now. When we launched, we were 29. And so our goal was to sort of launch a bank with less than 30 people. And so that was ambitious, but we just scraped it in. But so some people see us as a startup, but we also partner with other companies, and some of them are small, like you say, like it could be 2 people in a team, or 20 people or whatever. But we also partner with technology companies that are bigger as well. So for example, Google or Apple, or we announced some partnerships with TransferWise, so first bank in Australia to do a partnership with them for foreign exchange, and then also Afterpay. And so Afterpay is now a public listed company. They're worth, 11 billion, and they're all over the world now and everything. But that partnership, when we first started it, they didn't have an API. They set up a new team in San Francisco, and we worked together to build that API because they just didn't have it yet. So they've also been growing quickly. So the other thing I'll just add to what Rob said is that when you partner, and you partner right, you can actually grow together and scale together. And I think that has been really useful in being able to build a bank rather than just partner with a big bank.
Okay, great.
So this is really telling us that a neobank offers the opportunity to rather than it just being a service providing, right, but that it's an actual evolution for both of the parties involved, that may be part of what's going on here then.
Yeah, I mean, we win all these awards and stuff about the relationship between Bendigo and Ferocia, right? Because Up is unique in the market in that sense. And we've had a lot of traction, a lot of success, but a lot of it comes down to trust. So you can't just partner with a bank, like walk in off the street and go, we're going to do this amazing thing. It takes time to develop that trust. We, again, were in a fortunate position that we'd worked with Bendigo and Adelaide Banking Group for 5 years before we even started. So we kind of had a runway and we had a framework of how we could potentially do it together. But there's also in any partnership, and they're a great partner, they're a great bank to work with. The reason is you have to align any partnership with your values and your ethics. And so for us, Bendigo is a very community-oriented bank. They care a lot about people. They care about the environment. All those sort of things that matter. They're things that matter to us. And so I think that the partnership is not about technology or size. It's about finding an alignment with the right type of partner so that you can do it together.
So one thing we heard about, and I guess it's very obvious to the market in as far as a consumer neobank, that your front line, your customer-facing touch point is the app and the digital services you deliver. But, Alex, when we had you on the podcast and we're talking about Judo, your message was that your front line are the business bankers and staff you'll put in place, and digital is really more in the background to support them and to make the running of the bank more efficient. So can you give us an example too of where digital plays a role and how that supports your front line?
Yeah, great question. So just to sort of explain a little bit what we mean by that, which is we looked at the market. So I'll start again. Judo is an SME-focused business bank. Okay, so we're not a retail bank as such. We're an SME-focused retail bank. That's what we do, and we lend money to SME businesses. If you listen to what SME customers say, they all say, our banks aren't listening to us, they don't understand us, they haven't got the skills to be able to lend to us anymore, I don't have a relationship with my banker, all they do is send me to a contact centre or send me online. All right? They don't understand my business, they can't, and it's too hard to do business with them. Now, we solve that by putting highly qualified, highly experienced, credentialed bankers back in the premises of those customers and actually understanding their business and actually being able to lend to them in a way that we would have lent to them as bankers 15, 20 years ago, rather than just lending against the security that they have in their property. And that's a huge missing gap in the market. Now, if you start with a blank sheet of paper, which all of us are really lucky to do, you can actually think about the technology that you're going to provide. So rather than provide effectively the digital technology to the end customer, we try to create a process where our bankers could completely control the experience for the customer, and they effectively had all the digital components that they needed to be able to do that. So from an operations perspective, we don't have a centralised, anything. We don't have a centralised credit team. We don't have a centralised operations team. All those things you'd see in a big bank don't exist in anywhere near the scale that you'd expect it to see. It's all out in the front line to support those bankers. A story I heard when we first started employing people was, as an ANZ banker, I'd have to log into or input stuff into about 26 different systems to complete the deal. With a blank sheet of paper, you don't have to do that anymore.
All right. So in many ways, the digital you have is staff facing.
Correct. Yes. Yeah. Because the customer wants to speak to a person. Yes. Yeah. That's what they really value, and that's what we try to provide.
So Andrew and I joke a lot about my digital wallet on my iPhone because it's got more and more and more and more cards in it, right? The first one was an Up, the second one was an 86-400, just because that's the order you came out of the market. And then every time Andrew and I would have a meeting, it'd be like, there's this new one, and I'd immediately sign up for it. I had a meeting with Christina, my first one. She's like, there's this new neobank. And the wallet's getting a little crowded now. Here's the question. From a consumer's perspective, and I think this is also true for a business bank, you're now starting to reach a state where there's going to be a paradox of choice, where in fact having more solutions in the market actually produces more friction because it's more decision for the customer. How do you get around the fact that the neobanks, although they're easier to start than a big four bank, and you still have the on-ramp of raising capital, but you're still going to see a lot of these entrants, and you're still going to have a lot of consumer confusion, paralysis, indecision as more entrants come onto the market.
Yeah, we're seeing that now, but we also have seen it at scale in the UK. So I think it's a good indicator of what we can expect. So they're a little bit further down the path, like 4 years into the journey and 3 years into the open bank journey, and they have more than 50 new neobanks, right? Or new digital banks. So from an Australian perspective, what we can expect is that we're at this inflection point where we're going to get all these new players, international players, domestic players, neobanks, challenger banks, all this sort of stuff, which does create competition and innovation and consumer choice, but can also create confusion and so on. So I would just answer it in this way, is that what we saw in the UK in the last 5 years is people going from having 1 or 2 bank accounts with different banks to having 5 different ones. And now the banks are competing over share of wallet as opposed to being a primary financial institution, right? Same thing's happening here in Australia. We have 55 million bank customers in Australia and we have 18 million adults. That means that everyone in this room, on average, has 3 bank accounts, typically with 2 or more banks. So that changes in the process of happening, and now you might, for example, use Up as your spender or your saver. You might use CommBank for your mortgage. You might use NAB for your credit card, whatever. That's what we're seeing happening. I think that, I'll let you answer for yourselves, but in 86400's case, it's like, how do we help people do that better, right?
So this might sound a little bit strange, but Australia actually doesn't need another bank. Like, it doesn't need any more banks if the bank is going to be exactly the same as what's currently in the marketplace. And so in terms of new banks, they need to offer something genuinely different. So we've worked really hard on all the utility stuff. We've got all the utility stuff that you'd expect, Apple Pay, Samsung Pay, Google Pay, Fitbit, Garmin Pay, NPP, OSCO, real-time payments. But it's the wow stuff, that the experiences that people haven't seen before, that will make the difference. And so it's that balancing, building all the functional stuff with the wow stuff that people just haven't experienced in Australia or anywhere in the world, actually, with some of the features we've delivered. We've also seen the exact same phenomenon that 50% of Australians have 2 or more bank accounts with 2 or more financial institutions. And so one of the things is that big four banks talk about their main financial, we're the main financial bank for someone. That term is just going to become ridiculous. It's already ridiculous. If banks think just because a salary goes into account that counts someone as a main bank financial customer, it's ridiculous. The reality is, and we've actually had a cute ad playing that said basically, it's okay to keep seeing other banks. Just try us. And that's what's happening. That's what happens when the market changes. People just try you to start with. And then it's up to us and up to others to demonstrate you can do something really different. That's what's happening. So yeah, sure, you might have 4 or 5 cards in your wallet, but you'll probably only end up using 1 or 2. You might use someone for savings, you might use something for travel, you might use something for someone different. And the reality is those who can actually help people do different things will win, and those who think that they're going to own everything, a whole 100% relationship for the customer, that's just not going to be the world.
All right, so Andrew, I think you and I need to start Australia's first meta neobank so that we can manage the fact that everyone's going to be walking around with 10 or 15
That's right.
different bank
Trivago at bank.
But surely you don't carry them in a wallet still, like as a physical one, Mark?
I don't.
He likes bright-coloured things.
I do like bright, if you're starting a neobank, give me a bright-colored card, it will be in my wallet. All right, so final question before we go to the audience. Exits. You're all startups. You must have an eye on what your exit is, although you're all quite different. So do you want to give some reflection on, are you headed to a public offering? Do you think you're headed because at some point the big four are going to get nervous enough they're also going to try to buy you, right? Because that's just the deal here. So how do you see that happening as you folks evolve? Because every startup has to have some idea of what an exit is.
Me? Yep. Again, we're a little bit different. So we've raised no money at all. We are a self-funded organisation, and that puts us in a slightly different position that we're not having the same sort of consideration. So our idea is to build Up as a bank that becomes the #1 digital bank for under 35, or the #1 bank for under 35s in Australia. To do that would require us to have 2 million customers, because the #1 under 35 today is Commonwealth Bank, and they have 1.86 million customers under 35. So that's a lofty goal. If we continue at the current cadency, we've been in market for 15, 16 months, we will be a top 10 Australian bank by the end of this year. So we're growing very fast, fast deposits, fast customer growth, all that sort of stuff. So the question for us is not when to exit. The question for us is, will we be alive in 10 years, 20 years, 50 years, 100 years? So we're trying to build a bank that is around in perpetuity, like the current banks that we see that say we're 150 years old or 200 years old or whatever. So we don't have our eye at the moment, and not saying anything could happen, but we don't have our eye on what's our valuation, what's our enterprise value, what's our exit strategy, are we going to do an IPO? That stuff isn't interesting.
And a question you may not want to answer, are you still connected at the hip to Bendigo and Adelaide, though?
No is the short answer, but it's complicated. And it took us about a year to work with the regulators to set up in the first place.
Yeah.
And it's taken us about another year to go on a journey with the regulators so they understand how we're growing and as we scale. I would say in the next year, it could change again, because as we scale, the structures, the legal structures, the technical structure, the business structures, everything needs to change. And probably, for example, we might like to raise capital to fuel the growth.
Look, we're entirely focused on how do we provide a better experience, better product, how do we get great customer satisfaction, and how do we create advocacy. And those things will actually drive the success of 86-400. In terms of capital events, we're in the middle of a capital raise right now. In terms of a public offering, it's likely to happen in a sort of 2 to 3 year time frame. But for us, the driver of that is really about just accessing the sort of capital you need to grow a mortgage book. What a lot of people don't understand is that the capital we require, we build a bank, an entire bank, end-to-end, everything launched less than $50 million. What we need capital for is to put it set aside for mortgages. And obviously we're the only one who's actually launched mortgages in the marketplace, and so that's the pathway to profitability. So capital events, public markets provide you great access to capital. That's the main reason you think about that.
Simon?
Look, we're a VC-backed company. As you know, in raising money, you need to be having forecasts and expectations, etc. These are your investors, and they're investing in you because they want to get a good return. Where we are today, we actually not necessarily focused on the exit. It's much more about focusing on the value, and we're trying to win the Australian market this year, and then it's very much about globalising what we're doing. We think neobanks isn't necessarily just a trend in the UK and Australia. We think globally everybody loves a good customer experience, and we think digital is the future. So we're super focused on really value and what we're doing.
So let me reframe this, though. If we were thinking about people who are or firms that would acquire you, it would be someone like a Swift, right? Like someone who actually needed to offer that service layer that you're getting very good at.
Oh, look, I suppose potential. It'd be probably more than likely someone in the financial space.
Yeah.
We're connecting a number of different pieces together. It could be in the fraud area, it could be in the payments area, it could be a number of different areas.
Alex?
Look, from Judo's perspective, when you're raising money, you go through that VC process. Everybody asks, what's the exit strategy? How's it going to work? The investors want their money back, or they want some liquidity at some point. And we always say the same thing, which is we're here to build a long, sustainable business. We're here to build Australia's best business bank. That's going to take a few years. Exactly what will happen and what the exit strategy looks like after that, we'll tell when we'll see what the market says. But all options are on the table and have got to be considered. But it's not something that we're really actively thinking about at the moment at all.
I'd just like for the audience, there's probably a lot of people in the room that have a startup or been involved in a startup or whatever. And I think that to all the points that were made, you can get very distracted by what's my exit strategy, what's my valuation, all that sort of crap. I think focusing on the customer, focusing on the experience and being the best at what you can be, the rest of that stuff is an outcome. Like it really does follow. And so if an opportunity arises, like you said, the door's always open. If an opportunity arises for an acquisition or an investment or a public listing or whatever, and it provides you with access to market, access to money or whatever it might be, or scale, then you can consider it at the time, but my advice would be, don't get caught up on the idea that you need to do all that stuff. That stuff has to happen, sure, but it shouldn't be the focus. Because otherwise, what are you building? You're building a company to raise money and then you're building a company to exit? Like, it's kind of a weird thing.
Agreed, it's a weird thing, but at the same time, I'm asking it because in Australia, it's also a new thing. We haven't had banks forming and going public for, how long was it? 40 or 50 years when some of the big four went public. And so that's also why this is an interesting thing, because we're seeing a new kind of exit for a new kind of business here.
Well, also I heard when everyone was answering that a lot of the capital comes from overseas, right? Like the Australian capital market is also quite small in a global sense, and so to do it properly as a bank, you probably need to access global money, not just Australian money. And that's been changing over the last sort of 5 years or so, but at the same time that technology's been adopted and that neobanks are launching and that the payment system is updating, also we've seen more capital coming into the market and more access to capital and more venture capital funds and so on and so forth.
But you're still talking, I mean, most of the funds are sort of 400 or 500 million. You would suck up an entire fund to do an entire funding round for any of your banks. All right, time for you folks. Now you folks, when you bought your tickets, you submitted a bunch of questions. If you want to ask that question right now, this is the time to do it. I will go out into the audience with the microphone and hand you the microphone. Who would like to go first? We got 20 minutes for questions. There's a hand in the back there. There's one over here. Okay, but hold on. You were up first.
Thanks, Mark. To any one of the banks, the fundamental problem, I think, with neobanks, I used to be a banker, I stopped that 30 years ago, is that your cost of supply, your cost of goods tend to be more expensive than the established banks. How do you address this issue when your funding costs, which is a key driver of the cost of your loan products, you have a systematic disadvantage unless you're leaning on a big bank balance sheet or you've got a guarantee from one, in which case you're not really an independent bank. Talking to about independent banks, that is.
I'll happily take that one if you like.
All right, so this is, if I can repeat the question. So your cost of doing business is higher than a big four bank?
Yeah, I would say it's the complete opposite. Just the efficiencies we've built into the business from day one puts us miles ahead in terms of efficiency. So for example, whether we bring on board 500 customers or 5,000 customers on a day makes absolutely no difference to our cost base. There is no human person involved in that process. We've got the ability to scale up. The fact that we're operating, in fact we even built a bank for less than $50 million just demonstrates how efficient we are. $50 million is basically the average price of an average compliance project in a small department at a big bank.
Is your cost, are we talking about cost of capital as well?
Yes, I was going to say, what about from a balance sheet perspective?
Yeah,
so the cost of raising deposits perhaps
but this is a perpetual piece that you build, right? So if you build a very, very efficient business, then you are spending less of every dollar you make on the business, and then you can actually be self-perpetuating in terms of that. Now, obviously, right from day one, you've got a slightly higher capital ratio than the larger banks. You might pay slightly more in terms of deposits, but they're only minor things in the first instance. I mean, the reality is that big banks in Australia will not be able to operate long term with 2% plus margins. It's just not going to happen. And so we've built and designed all our models from a much, much lower margin right from the start, and built a very, very efficient model.
It's also a tricky one to answer because we're all in the early stages of growth. So we just passed 200,000 customers, and that's great, right? But you know, that compares to the big banks that have millions and millions of customers. So what we look at instead is a different metric. We say, okay, well, how much does it cost us to acquire those customers in an all-of-company cost? So how much money have we spent to get from zero to where we are now? Divide by the number of customers. It's about between 30 and 40 times less than what it costs a big Australian bank to acquire a customer.
Amazing.
I agree with all the sentiment here about the efficiency, but to come back to your question, the capital, managing the capital on the balance sheet for a big bank and for any neo startup is going to be a really important part of the process. And managing the way that you bring funds in, making sure that you have a distribution of sources of those funds for the balance sheet to ensure that you have the appropriate liquidity in the balance sheet and going forwards is a really critical part of the process. The Big Four have an advantage in being what they call advanced banks, so they can actually set their own capital thresholds in that process, and they have models to do that. As neobanks, we have effectively a 20% ratio that we have to work to. So there is some structural stuff that you have to think about, and you know, we have to leverage those efficiencies really well, and we have to manage the net interest margin very, very closely.
Okay, thank you. I think there's two questions here.
Yes, thank you. So how important would you each rate the user experience of the mobile app for acquisition of customers? And inversely, how would you rate it on retention of customers versus your fundamentals, like your basics, mortgage rates, etc.?
Good question.
Yeah.
Okay, so it's the UI question here. How important is it?
It's absolutely critical in our view. Like I call it the excellence of everything, which is kind of an impossible goal. But customer service, user experience, user interface, features, price, all those different things, they have to be, all of them, awesome, because the banking system in Australia is already pretty good. So you know, the ability for someone to have ease of use and a great customer experience, a great user interface is first and foremost the thing that makes people want to try what we're doing, because like Rob said before, you've got to do something different. You can't just do what everyone else is doing. And then for us, for example, around about half of our customers have been referred to us, so it costs nothing to get that customer. It's word of mouth growth, and that is because they then want to stay with us. And the other metric we look at is how often customers come back and use us again. And most banks in Australia would use a common sort of metric of, you know, are customers using us maybe once a month, and then therefore are they an active customer? We would measure that in multiple uses per day. And so the user experience becomes even more important when you're trying to engage customers and retain them. So I think, to me, it's 11 out of 10.
Yeah, look, your user experience is absolutely critical. That's why we've spent an enormous amount of time and effort into it. We use the jobs to be done framework to work out what you actually need to do in banking. We use some pretty sophisticated methods, the max-diff method, to prioritise those. We then balance that, as I said before, that utility. So you've got to have all the utility, right? People who think they can launch a bank just with a great interest rate or one novel feature is just not going to be successful. So we've got all the utility, not 100%, but we're aiming to have absolutely all the utility. And then we're balancing that with that wow experience and creating those wow moments that people just didn't expect from a bank. You know, you surprise people all the time with what we actually can do. And so it's absolutely critical. That's the main interface. It's not the only one. We're very active on socials. We're very active direct communications, contact centre, etc. But the main way we're delivering the bank is through the app. So the experience has to be fantastic.
We had one more question just here and then another.
This one might be a little long-winded, so bear with me. But you mentioned...
Keep it to one sentence, please.
We've had mentioned that Australia doesn't need another bank, but all the neobanks are building on the same kind of banking platforms that already exist, or they're white labeling existing banks. How much is that impacting the ability for them to actually innovate on the product versus trying to innovate in other areas? And why isn't any of the neobanks building their own banking platform?
All right, good question. And you got it in a sentence. Thank you.
It is a good question. I don't think it's quite right. If you look at the features, like we have a public roadmap that has all the things we're building. Most of the things on there are not delivered by existing banks. A lot of the new features and functions, we delivered some stuff this week. No bank in the world has this feature. We call it covers. We've got another one, forwards. This is technology to deliver a different experience for customers to be more connected with their money, to spend wisely, to save effortlessly, to be aware of their financial position, to help customers with financial literacy. We're solving a problem that banks aren't traditionally going out to sell. Traditionally, banks go out, make a product, try and sell it. We're not building on top of that same stuff. We're completely building from scratch new features, new products, new capabilities. So I think it is a very good question, because if that's the perception in the marketplace, it's actually not like that. It is a lot like that in overseas markets. A lot of the neobanks that have been around for 3 or 4 years haven't offered anything different. The reason it's different in Australia is that CommBank, NAB, ANZ and Westpac, ING and Macquarie already offered something better than any of the other neobanks anywhere in the world. So every neobank that's launched here in Australia has to deliver something that is different and better, otherwise it's just not going to work.
But how many of those problems products are you actually solving the problems that are created by the fact that it's just a savings account set like every other bank?
Yeah, it's not a savings account like any other one. I'll give you some innovations off the top of my head. So first, Apple Pay, instant Apple Pay in Australia. Before Up launched, to get a bank account in Australia, it took days. You had to wait for your card to arrive, scan it, put it in your Apple Pay. Days, maybe 3, 4, 5 days, whatever. Our average sign-up time, 2 minutes and 12 seconds. First cloud-hosted retail bank on Google in the world. First cloud-hosted retail bank in Australia. First bank with instant Google Pay, first bank with instant Samsung Pay. All the banks have been around for 200 years, 100 years, whatever. In the last 30 years, they've done none of those things. So I think that the question is a really good one because it helps to realign people's thinking, but actually the neobanks, and particularly Up, we think, is innovating and is being a first mover. And what we've seen now, we did a partnership with Afterpay, costs us nothing. There's no commercials involved. It's just a great fintech working with another great fintech. Commonwealth Bank did a partnership a year later with Klarna, which is the same thing as Afterpay. They spent $200 million to do that partnership, and they haven't even started it yet. So it's a very different relationship between the neobanks and the traditionals.
Yeah, I just add that I'm not sure whether, I can't talk for other banks, but we haven't just white labelled. We've built our own technology. Everyone thinks that the app is the great thing we've built. I mean, there's about 500,000 lines of code. There's 500,000 lines of code in our app. Our customer experience engine, which is the proprietary technology we've built ourselves, has like 4 million lines of code. That's ours. We've built that. That's not white labeling anyone else. That's the work we've done. That enables us to deliver a very different experience through the app. If you haven't done that work, I'd agree with you. If you haven't done that work, it's very hard to innovate with an app. But we've done that work. We've spent that money. That's where our 26 odd developers spend most of their time, so they can deliver different experiences. A good example of that for us would be the fact that we let you see all your bank accounts, all your balances, all your transactions cleansed. They look better in our app than they do in your existing bank in the 86400 app alongside your 86400 accounts. That's the type of service you can't do if you're just white labelling something else. You've actually got to build that yourselves, be able to bring that data in, deal with, and we're looking at sort of 300,000 points of data a day now for our customers. So we have built that technology.
Next question over there. Great. Okay.
So my question, I think, is for Alex, but if anyone else can answer, that's cool. So I was interested in what you were talking about SME business lending and how you were talking about recruiting highly skilled frontline staff who had a broad skill set because they don't want to be sent off to a call centre, etc. So my question is, are there handoffs in that experience for the customer, or are they speaking to, because usually there are some quite deep skill sets, there's credit, there's sales, there's settlements, whatever there is. Are there handoffs in that customer experience, or is that one person dealing with that whole end-to-end experience?
Great question. One person, one experience. We try and make sure that the customer's banker deals with absolutely everything through the process and they have a long-term relationship with that customer.
Excellent. Sam?
Any thoughts from the panel on the use of distributed ledgers in neobanking?
I have a view. I think the distributed ledger is a database, a good one. And so if you can use it and it's better and more efficient than whatever else you're doing, then good luck. Like, that's great. Like, it's awesome. I don't think that it's something that we specifically say we want to do some sort of blockchain thing or whatever. There's a lot of companies that's their whole business. And so I think it goes back to the partnership model. If people have a great solution, bring it in. If you want to build it yourself, that's great as well. But yeah, we see it more as a piece of technology as part of the tool set. And so when we're designing and architecting new things, we consider it as an option, and then it becomes part of our sort of solution rather than a solution on its own.
Simon, and I know we've just deprived you of your microphone. I'll give you mine because you were building early Frankie stuff on top of DLT, weren't you?
So yeah, originally we were looking to do, to your question, looking to build the actual core, then we're looking to build the next layers, etc. And there is huge benefits in a distributed ledger and what can be done. I think really what you need to do is, we were doing a closed, by the way, it was actually internal, where I think the huge benefits is actually going to potentially do a multi-tenant system with multiple different banks, etc. You need huge amounts of collaboration. You need non-parties all to be coming together at the same time. And I think you end up getting there. It might be a little bit difficult. And I think there's maybe a number of steps before we would get there.
I've got a question for Alex. Just out of interest, we see so many new neobanks coming to market. I think already in Australia there's been more than a dozen announcements, some live, some not yet. But of course, Judo is operating exclusively in the small business sector. And as a challenger, new entrant, you've kind of got that space largely to yourself. And, I mean, what's your strategic thinking from a business perspective that, before you know it, there'll be some others entering that space, or you've got some clear air for now, and why do you think that's the case?
Oh, look, we already know there's 3 or 4 other ones in the wings looking to come forward, and we encourage it. The more competition that there is in the market will drive more and more switching activity from the big 4. You know, even if Judo was, you know, outrageously successful, we'd probably never take more than 3 or 4% of the market share. But if we've got 10 new entrants in the same space, all giving great propositions that are better than the incumbents, that just encourages people to say, oh, there is an alternative and we can move elsewhere. And so we really, really encourage the competition into the market. It's great that we managed to get there first. It's great we got a bit of clear air, which is good. But we very much encourage other people to join the party.
Thanks.
Okay, that's probably going to be the last question. So there you go.
Thank you. In terms of other segments that you think are worth going after, so Dom, you said under 35, Alex is small business. Robert, you're kind of, I think, a similar demographic to Up, plus mortgages as well. What do you think are other underserved demographics or segments that still kind of have an opportunity for challenger banks to go after?
Well, I think actually Australia's well served by banks. Like, it sounds strange to me to say that, right? Like, most people are banked reasonably well. They just don't know what better looks like. They actually don't know what different looks like. And so for us, our focus is really that 25 to 45 age group. And the reason being is the problem we've been trying to solve from the start is banking has become difficult. You know, multiple bank accounts, we tap our phones more than ever. We have more money coming out of our accounts automatically than we've ever had in our lives before, subscriptions, etc., those sorts of things. And so the reason we're tackling that segment is because money's become difficult. We want to help people take control of their money, and it's really complex in that segment. But I think, you know, right across the spectrum, banking can be done better. Banking can be done better for almost every age group, every segment, every group. It's just that Australians haven't seen better yet. They're only just starting to see it here and here and here.
Yeah, I think I agree that you know, banking's for everyone. So whatever age you are, you have to use banking. So age is not necessarily a good way to segregate who your target audience is, although it is becoming legislation that you have to do that soon. So what I was going to say is that the opportunities in the Australian market, for example, is in clearing. So like bank clearing is sort of, Commonwealth Bank is the bank of last resort, and the big 4 banks provide that function, whereas there's a bank in the UK called Clear, and they're a neobank of sorts, but they're the first bank in 100 years or whatever it is to have a direct integration into the, you know, their equivalent of the Reserve Bank, the Bank of England, and they're actually providing interbank banking. And so that's an opportunity in Australia. I think the small to medium business is a huge opportunity. Like, Judo clearly is the first mover, but I think it is not just underserved, but it's underserviced. You know, like the actual solutions that are being provided with, you know, we'll put it against your home loan and all that sort of stuff. It's actually a very lazy market that could do with a lot of competition and a really good opportunity. For us, it's about focusing on helping people not just take back control with their finances, but also understand where their money's flowing. And that's, again, taking a different perspective. It's not demographic or it's not specific market. It's like, how can we help Australians generally understand more about where their money's coming from, where it's going to, and then automating that future. And that financial literacy piece is really important. And I think that we've seen overseas a lot of other companies say, could we solve that? And they haven't been very successful. So that's an area that we're particularly interested in, because we think Australia is a very mature market, so we can actually work with people to, you know, gain some advantage in that market.
Alex, and I don't mean to short circuit you, but do you see a time in the future when there's going to be a neobank that deals specifically with, say, small retailers, and then another one that deals with small manufacturers? I mean, are we going to start to get that specific around understanding and meeting a customer's needs?
Quite possibly. I think the key, and I say this to everybody, is really understand who your customer is, what proposition you're trying to give them, and focus 110% on that. It's so easy as bankers. I mean, I'm a 100-year banker, whatever it is. You know, we've gone from wealth to insurance to this to that to the other. But the art is making sure that you really understand what your customers want and you give them the proposition that they want. And if you can do that, you'll be fine. The challenge I always set to everybody that talks to me about this is really retail banking, and as you go up the curve, is really rather simple, right? It's not overly complex for most of us, right? It's not a but banks make it really complicated. Right? So really, the niche in the market is, as all these guys are doing, is basically try and make it invisible, right? Try and make it so simple that you don't have to do it anymore. And if you can actually start to do that for retail customers and for all customers, in fact, that's where you get some real magic.
That's a great note to end on. Big thanks, Dominic Pym, Rob Bell, Simon Costello, Alex Twigg. Didn't they do a great job, folks? I have to tell you, it has been an enormous pleasure to work with Andrew Davis making this series, and Dom is on episode 2, Rob is on episode 4, Alex is on episode 3. Simon was on our short list. We didn't get to him, but now he's going to be on episode 6, because what you've just heard will become the 6th episode of BETABANK. Look for that to drop in about 2 weeks. Go to betabank.show or just search BETABANK in your favorite podcasting app, and it will come right up. Please have a listen. We've been hearing good things. We hope that you like it. Now, more big thanks. Where did Christina go? She's taken off. Christina Singh and the entire crew from Stone and Chalk for being so amazing at putting this event together. Thanks to Alex, my producer, to Dean, who's been doing all the photography, for Dave, who's been doing the amazing sound. And thank you all. You have been amazing, attentive. Your questions are marvelous. And please stick around and enjoy a drink with us. Thank you very much.
Thank you. Thank you for having us.
Thank you.
Thank you.